Fed Day. So be ready for it. Most of the action, I think, is going to happen during the presser. People are going to be looking for if there's any kind of dovishness in there or hawkishness. And I believe that the Fed just is going to be non-committal because they have no visibility with what's going to happen. I know we're hearing that some deals are, right around the corner. I've also heard, Dale, the checks in the mail before too, right? So we'll see what happens. Not a lot of time to work out trade deals that usually take 18 months on average prior to this period in history that we're in. So let's get to the markets and see how we could react to whatever the Fed does. So here you go. All right, let's start off with the Dixie. So it's really quiet in here. And, guys, we were long from in here. This was a candle. It was a little early on, but we survived it. It's a nice trade. I'm thinking if we get back through 99.5, it's going to give us at least this 101 area, maybe even a little bit above it, 101.40, 101.50. So if you're currently long the dollar into this event and the Fed drives it, don't look to just take profits should it get up here. And look, we could break down and the dollar will be a buy. Okay. But not till I think 96, 70-ish, something like that, 96 in that ballpark. Extreme is 95. I don't think we could go to 95 right away and still maintain the divergence on the 4 hour. Unless we do this first. Okay. So this is still what I think could happen. And so you're going to want to be a seller in the Dixie up around 101, 101.5. I know a lot of the bears are getting frustrated trading this counter trend move in euro that, we did last week up here, about a candle or so from the top. So it's a nice trade for at least this wave. And this has been, testing your patience. I still think that there's a chance that we head lower before we go higher. So if you're not in the market, you want to start preparing yourself to start getting long around from 11.5 to 10.5. Okay. So this is going to be a pullback in the euro before we get one more thrust up towards, I'm looking for 117 handles on that. Similar situation, I talked about a potential 3 drive in cable yesterday, and so we weren't able to take out this high. We still could do it, right? And if that happens, I think we'll have divergence, but you have this neckline at 2.5, and if that's taken out, that measures towards 131. Prepare yourself to be a buyer in cable between 131 and 31.30 to all the way down to 130. And the yen is getting a little bit of a pop because let's talk about this for a minute. So we have a war in Europe with Ukraine and Russia. We have a Middle East war between Israel, Gaza, Iran in the crosshairs. And then what's happened between India and Pakistan could turn into a war. So that's on 3 different theaters that covers Europe, the Middle East, and Asia. Isn't that what they call World War? Anyway, that's what, it's amazing. We just sit here and I'm thinking maybe it was like that in the late 30s. You're just sitting around watching the rest of the world fight until you get drawn into something. So we'll see. Hopefully things settle down there. But Asia, because of its geographic location, it matters in currencies sometimes. So if you're in Asia, you'd probably rather sit in dollars right now than sit in yen. And that's why we're having this little pop. I think this was still it. We rode this beautifully after recommitting over this overthrow. But I didn't reverse and get short here. So this is going to be important for me to see, and it's acting better than the dollar. where it is if I get that move in the dollar up towards that 101 level. So we'll see. I'm not doing anything with the yen here either. Canada, I know I'm starting to sound like a broken record, and maybe we can make another trip down to 7.5. But I would not be short Canada. Look how far back you have to go to get a confirmed low. That's the 3rd of April. So it's been over a month since our last confirmed low. Nice little uptrend in the RSI. And I'm not looking for a home run ball, but retrace towards 140, I think, is viable once we turn and come out of this wedge formation here. So this is something else that I may take a shot at after the Fed if it's still there. Let's address the metals. Okay, I I had a losing trade yesterday in metals. I tried it at 61.8. Half the trade was a winner because I took $6 right away. If you trailed your stop to break even, you were all right. I just left my $25 stop. So a day early, right the market, wrong the trade. This high is 78.6 back. I think that gold has stopped. And even if we made a new marginal high because of this, although we still have to complete the gold silver ratio play to above 106, I don't think it's a great time to be long gold, especially if we could jawbone. I think what took gold down was that China's going to talk to us, not about the tariffs, but have a meeting with us to discuss having a meeting. Okay. So you heard what Luke and I were talking about yesterday during the interview, and it's very possible that China is doesn't want to look intransient, but I still think that even though they're going to be hurt too, they have the advantage. They're not happy about uh, us initiating it and probably let us twist in the wind through the whole 90-day um, delay that we had that takes us into early July. Anyway, I hope they settle it as just I see egos coming in. You know, who's the tough guy? So I implore you to go back and listen to the interview I did with Luke Roman, who's been here as well. Silver, uh, I think that's it for a while. Now, this could have been the low in silver, so I could see trying some silver and maybe buying some shares when silver's trading around 30 and a half to 30 to see if it's just a retracement of this, where gold I'm going to be looking for much lower numbers, and that's going to probably happen after this gold silver ratio achieves one more high. Um, Here's the yields. They look lower, at least for today. Here's the bonds. I got out yesterday. I made some money. I was in puts from here to here. Not a ton, but a little. I didn't like the fact that we were closing back inside the flag. So, the old default position of me in my head, I'll give us some time. Let's see. You have a lead. It's just, when the trade doesn't feel right and you have some money made, and don't use a limit order, just get out. In fact, if you're in front of where you trade from, the only reason to use limit orders is because you're not watching it and you're away and you have a level you believe in that you want to get in. But if you're watching it and it's close to where your limit order was, why not go to the market? How many times have you missed entries and exits because you left your limit order in instead of just going in when it was around that area and taking what the market gave you? And instead of getting that extra 10 pips either way, you let you know gain slip away, or you were unable to get into the position, you miss the trade. So think about your limit orders, because you're really not in the trade when you're taking it or getting in for 10, 15 pips. So if it's in your zone, that's close enough for government work. It's better than missing the entry and missing the exit because you have a limit order in. Okay, that's the end of my lecture here. Um, so I'm flat that going into the Fed. WTI, you know, it's come off. It'd be nice to see it close over 60. I can't rule out a third drive down either. So we'll see. Stock wise, I have no shorts on yet, and the S&Ps are acting kind of negative. They sold into them again after that big pop. So you could be short, and if you believe it, or after the Fed, and get out over 57, and probe and protect. And once we get over 57, maybe we're going to push up to 58, and then you attempt it again, and you're persistent if you believe the top is coming. So, I can make a case for either. So I'm pretty neutral now. The only thing I really wanted to short was Apple, and I didn't chase it after earnings. Maybe I should have. Here it is. It's the weak sister out of everything. Okay. Uh, but if we get another rally in the S&Ps, maybe we'll have another chance up here, maybe at 220. So I also wanted to cover, as the market's up, one of the darlings, which held up very well during the crash. Oh, it's getting hit pretty hard today. It's Uber. Okay. In fact, it must have had earnings because it got to my line. That's something. So I presented this when I was on with Maggie last week because it's a Wall Street darling. Uh, did we take out this high? I don't think we did. So I thought we'd go to 90, but that's kind of an ugly day. It doesn't have to get to the wedge line. Look at the divergence, confirmed high here, diverge high under 70. We didn't take out this high. So maybe you put a piece on and hope you're early and have another chance at 90. But take a picture. It's pretty classic if we had just had this wick stretch up here. But sometimes this is enough. Okay, it's like a third attempt, and it didn't take this high out. Anyway, I think that's pretty ugly action, especially if it's on top of earnings. And the lesson here is if you learn how to trade 3 drives, and if you're patient enough to wait for them, because they're one of your more effective trading strategies, you could even call it your edge, which it is for me. And when you have an edge, you also get cut by the edge sometimes. Okay, so there's Uber. I'd be if I was long, I'd be booking. And if I was a speculator, I'd start probing the top. I think they had a merger. That's what it was yesterday. Anyway, that's Uber. Just wanted to bring that up. And Tesla is in a box. Okay. And this is probably going to be pretty important for the overall market, be a sign that things are stabilizing. But, I don't see that did anything right except it did diverge here. But I don't know. I'm not impressed. Looks like a straight line move with the flag, and that you could be short and wrong over 300. All right. And be looking for new lows. Did confirm this low, but this one did diverge. But I don't like these flat bottoms. Anyway, buy Tesla over 300. You could sell it here looking for under 2.25. And I think that's what I'm going to leave it with, Warriors. I want to wish everyone good luck on the Fed. If I see anything there, I'll be posting it in the room. Here's our room. It's free. My name's Coach, and we do lots of posting during the day. Mike's going to give you a great curated list of the strength, the sweeps, and I post charts in here. Members that join for free, no charge. We're not going to try and sell you a newsletter. Okay. So come on in and share your work. Your work will get better if you're presenting it because it'll be your best stuff. So remember, don't just count your pips, count your blessings. And I'll see you tomorrow after the Fed. We'll see how things shake out. Remember, make sure that your equity is intact because the market will be here tomorrow. You can just let the dust settle. There's no law that you have to trade that day. And that's a wrap, everyone. See you on Thursday.